In case you think your incomes are always less than your expenses, or you're always worried about your ballooning credit card bill, or you always plan your tax investments in the month of March, these are all symptoms that you are struggling with your personal finance. And today I'm going to discuss with you on the various facets of personal finance. Hi friends, I'm Shobit from Mentor Shobit, and today I'm going to discuss what are the different areas of personal finance. Generally, whenever we talk about personal finance, we only look at savings or investments which we need to do to meet our future financial goals. But personal finance encompasses much more than savings or investments. And today I am going to discuss with you all the various aspects which are related to personal finance. There are five aspects of personal finance which should be mindful of. And the first and most important, which we all are very aware of, is the investments. So whenever we talk about investments, friend, or savings, the avenues which are very famous with we Indians are bank fixed deposits, or now the equities have become very popular, investing in various stocks or shares or mutual funds. So these are the some of the most prevalent or most common investment vehicles or investment avenues which we consider. But there are much more or much better avenues which are available for us to consider while taking a investment decisions. There are various asset classes, and on those asset classes there are various avenues. Generally, whenever we talk about equities, we look at either directly buying shares or taking exposure to mutual funds. In the same way, if we talk about debt, we buy either debt mutual funds, or we buy companies fixed deposits which are available in the market. But what if I told you you can buy bonds just like shares from the secondary market at a much better rate? Just to give you example, today if you are taking a bank fixed deposit of SBI, it is available at around 6%. In case you buy SBI bonds in the secondary market, you will get much higher yield. Then talking about real estate, for real estate investments, we generally conceive buying physical properties. But now there are various avenues through which you can buy or you can take exposure in real estate, like real estate investment trust, in which all the commercial properties are pooled and the income generated from that can benefit your investment. Or you can have exposure in real estate by buying stocks of various real estate companies or through real estate mutual funds. Same way, talking about gold, if you want to have exposure in gold, you can either have exposure through buying physical goods, which are very common in India. We are the biggest importer of gold in the world. If you want to have exposure in gold, the other better avenues are like sovereign gold bonds, in which you get assured interest also, and the gain which you will have while investing in sovereign gold bonds will be also tax free. So there are various avenues. Now there are more sophisticated products which are available, like alternative investments funds, where you will have some other avenues through which you can have exposure. So in a nutshell, what I would like to tell you is there are now much more better or much more diversified avenues available for investors to have exposures in various investments, and we should be mindful of. Remember, once the diversified portfolio will have, the chances are that the returns will be less volatile and our risk will be also lower. And these aspects we should be mindful of while investing. The other major aspect we are most ignorant of is our borrowings. Borrowings means whenever we don't have financial strength to meet some urgent financial needs and we need to borrow, how we should borrow in an effective manner. Remember, there are multiple avenues through which we can borrow, and every avenue will offer us its own benefits and shortcomings. We should borrow in a efficient manner. Whatever savings we can do on our interest outgo, that is a saving that will help us in meeting our future financial goals. Just to give you example, suppose we want to have a home loan. Whether you are aware that the rate at which the banks give you home loans will be much cheaper or will be cheaper than the rate which are offered by the non-banking financial companies. The sole reason for the rate variation is the benchmark against which these institutions lend are different for both banks and non-banking companies. The overall cost is also less if you borrow from the banking companies. So we should be mindful of, because the loans are for longer tenure and the amount is large. Even 10 bips savings on the interest front is a huge saving for retail investors. Now talking about personal loan, do you know that the cost of personal loan is at least 5 to 10 times higher than compared to if you take loan against the savings which you have either in fixed deposits or in various securities like mutual fund or stocks. So while taking borrowing decision, which there are various avenues through which you can reduce your interest costs, and we can borrow against our properties also. So we should be very mindful of, whenever we are taking or using our credit card, the cost is huge, we all know. But do you know you can open a cash credit account in the bank which can be used for emergency purpose if you require money for a short term, and the rate or the cost of borrowing for your cash credit account is at least 10 to 15 times or even more lesser than using a credit card. So these are the various aspects which you should be mindful of while borrowing. And the third important aspect is the protection. What we mean by protection is the insurance we take, either it is life insurance or non-life insurance. The insurance cover which we take for any eventuality which happens to us, so that our family is well taken care of. Do you know there is a method through which we should determine how much insurance coverage we should have? The other problem which most of the investors or customers face is they mingle their investment with insurance, and they buy insurance for investment purpose, and that is grossly wrong idea to do, because the cost for investments in insurance products are much higher. So instead of mixing insurance with investment, it is better to take a higher insurance cover. Most of the us, we take insurance cover which is grossly inadequate, because we don't know how to ascertain the quantity of insurance cover one should have. In the same way, if you talk about non-life insurance, it covers your health insurance. Then also the health insurance is also we take on an ad hoc basis. Most of the investments which we make, or most of the financial decisions we do, it is mostly accidental in India. If somebody comes to us, he keeps on pursuing us to take some investments or savings, we just do blindly without following any formula or methods. And that is also a very wrong way to approach our personal finances. So talking about health insurance, most of us consider our health insurance which has given by the company as adequate, which is also a wrong perception. Talking about vehicle insurance which we take, there are also various aspects which we need to be mindful of, whether we are taking third party insurance only or we are taking holistic insurance, whether we are taking depreciating cost insurance or insurance on the original value of the car or vehicle. So these all aspects we have to be very mindful of, and the property insurance also we should be considering. So these are various aspects which we need to be very mindful of, or we should have an advisor who should look into each and every aspects of personal finance. Now the third important aspect which we should be mindful of is the tax planning. What we mean by tax planning is how effectively we are investing, or we are saving, or we are diversifying our income so that our tax outgo is less. Generally, the tax planning which most of us do is only under section 80C, which is 1.5 lakhs. But what if I told you there are n number of sections available in the Income Tax Act, through which you can reduce your tax outgo? Like if you have bought any property, then you can save on interest outgo. If you have bought any medical insurance, not only for you but for your parents also, then you can reduce the tax outgo. So there are multiple avenues available which we have to be mindful of. In case we are able to plan tax liability or our tax outgo from the beginning of the financial year, or if we are able to plan much in advance, then we can able to save much more tax which we need to give to government. Like, just to give you one more example, how many of us are considering national pension scheme for saving additional taxes? So tax savings are not only for reducing our tax outgo, but it also helps in saving for our future expenses. And the fifth aspect is the estate planning, which is almost non-existent with most of us. What we mean by estate planning is the will writing, or whether we have planned for who will take care of the responsibilities and assets which one have in case we are not there. So this is one aspect which we need to be mindful of. So in a nutshell, these are the five aspects of financial planning which one has to be mindful of. And please remember, funds, it is not only savings of our current income which will help us in meeting our future financial goals, but reducing the expenses also equals to earning. So if we can reduce on our borrowing cost, if we can plan our protection or insurance covers for various aspects, that will also reduce our future financial expenses. I hope this would have given you some value as to how you can plan your personal finances better in a much efficient way. Do consider sharing with your family and friends in case you find this video useful. Thanks for watching. Until I will see you again.